It's a terrible morning to you, ladies and gentlemen, and welcome back to Crypto Ninjas. My name is Dale, and today we are all the entire market is going through a seismic shift, catastrophic downturn, you may call it, and not just crypto, by the way, marking one of the most severe corrections since the 2020 pandemic-induced crash. An estimated $300 billion has been erased from the total crypto market capitalization in a single day, with numerous altcoins suffering losses exceeding 80 to 90% from recent highs. For instance, on Binance, SUI lost 81% of its value, from $3.3 to $0.5 in just 2 hours. Cosmos Atom plummeted from approximately $3.7 to a mere 0. And get this, $0.001. Yes, that's 2 zeros amid the chaos, underscoring the fragility of leverage positions and broader risk aversion. Honestly, I don't think it's just about over-leveraging, because there's no way a top coin like Atom with $1.5 billion in FTV can drop 99.5% of its value instantly. There's probably something severe going on. If you are reviewing your portfolio at this moment and, crying, rest assured that this sentiment is shared across the community. To understand why markets are dumping and where we might head to next, we'll have to examine the timeline of US-China tariff escalations that precipitated it. So, let us trace the chronology of this intensifying trade conflict, which has profound implications for global supply chains and risk assets like cryptocurrencies. But before we get into the video, make sure to like and subscribe to CryptoNinjas for more contents like this. And use our Binance referral code for 20% off of the trading fees for life. Thank you very much. To start, this escalation originated in early 2025, following President Trump's inauguration. On February 4th, he invoked the International Emergency Economic Powers Act, or IEEPA, to impose an initial 10% tariff on all Chinese imports, primarily citing concerns over fentanyl trafficking and persistent trade imbalances. China then retaliated swiftly with duties on $106 billion of U.S. exports, including soybeans and liquefied natural gas, severely impacting American agriculture. The key exports to China have since declined to near zero in affected sectors. By April 2025, U.S. tariffs have surged to an average of 51.8% on Chinese goods, encompassing steel, semiconductors, and other critical materials, while Beijing countered with 32% levies. A temporary respite arrived in August with a 90-day truce capping U.S. tariffs at 30% and China's at 10%, extended through November 10th to mitigate disruptions during the holiday shipping season. Things were looking up and cooling down because this pause fostered market optimism, enabling Bitcoin to reach $126,000, a new all-time high on October 6th. Crypto Twitter rejoiced, expected a wonderful Q4 market bull run, and honestly, myself included. However, tensions reignited on October 10th when China issued quote-unquote hostile notifications globally, announcing comprehensive export controls on rare earth minerals. President Trump then responded via Truth Social. China's taken an extraordinarily aggressive position. Starting November 1st, the United States will impose a 100% tariff on China, over and above any that they are currently paying. He further hinted at restrictions on critical software exports, heightening alarms for AI or cloud services and crypto ecosystems dependent on US-China interconnections. And that's it. The fallout was instantaneous. S&P 500 futures declined 3%, Nasdaq futures 3.5%, and don't get me going on cryptocurrencies. It spearheaded with $300 billion in value lost within an hour. Crypto Twitter immediately panicked. Massive sell-offs. Major cryptos were down 80 to 90% in one single 1-hour candle, costing catastrophic liquidation calls for every leverage position as low as 2x. It was reported that over 1.4 million traders faced liquidations and about $19 billion in money gone into thin air. With that are accusations of orchestration, with on-chain analysts claiming that there were many whales already loading shorts in anticipation of this drop. At about 4:30 p.m. ET time and 4:49 p.m. ET time, a whale, quote-unquote, purchased over $23 million worth of shorts position. The whales then promptly sold the shorts position into the 5:20 p.m. ET bottom just 30 minutes later, as volume crushed longs. This volume was so strong that it led to the first ever 20,000 candlestick in Bitcoin, a negative $380 billion drop in market cap. Not only was this the largest liquidation ever, it was 9 times the previous record. Compounding this, widespread complaints target centralized exchanges such as Binance for alleged deliberate fund restrictions during the volatility, system outages, delayed withdrawals, and automated liquidations. One trader reported that Binance automatically closed his shorts position, not letting him profit, and still leave his long position open to get liquidated. This doesn't sound good, and if the biggest, most liquid exchanges in the world is doing this, who can we trust? The fear, uncertainty, and doubt index has surged to extreme levels, with Bitcoin dominance rising to 61% as alternative tokens suffer disproportionate declines. This environment fosters a sense of betrayal. Yet, popular voices in crypto still remind us that weak hands selling, but opportunities born in fear, and that every dip is an opportunity. Looking forward, the trajectory hinges on the November 1st implementation date, which looms as a pivotal threshold. In the near term, you should anticipate heightened volatility. Further Chinese countermeasures on rare earth could escalate the situation, making Bitcoin test its $100,000 support zone again. However, it's not the end for all hopes. President Trump has since softened his statement a little bit and willing to meet up with President Xi in a summit on October 20th. If things go well, we might get to a mutual understanding and no more tariff escalation needed. Pair that with the upcoming interest rate cuts, market could still look better. At least, well, not dumping heavily, and Bitcoin might still retain its $110,000 key levels at the year's end. With that said, I am still leaning towards a hopeful momentum for Q4. Even though the tariffs might still happen on November 1st, but I think the market has already expected it and will not crash further. Unless from now to November 1st, President Trump and President Xi has another fallout, but I don't think that's going to happen as well. So what I'm looking for is opportunities to DCA some more and exit all of my positions before the year's end. Right now, looking at the RSI on the one-day chart of Bitcoin, then you're going to see that it's approaching 30, actually 38 at the moment. So it's a relatively good range to DCA. Compare it to the previous lows, as you can see right here, and it kind of forms a pretty nice bottom. This is your chance to DCA in some of the undervalued altcoins that were bleeding a few days ago. But be careful and always prepare for the worst case scenarios. Markets might drop even more, and if that happens, you need more money to ape in. Hopefully at the end of 2025, Bitcoin will still break through its all-time high and approaching $135,000. And of course, this is not financial advice. Besides investing, I'm also doing Binance Alpha airdrops to make extra bucks. You could make $1,000 to $2,000 per month on Binance Alpha alone. Watch the video up top for full guide. And that concludes our analysis. There are volatile times, and I don't think the worst is yet behind us. Markets might continue dumping following the US-China trade tensions, as low as about $90,000 to $80,000. So make sure to maintain vigilance and discipline. And like and subscribe to CryptoNinjas for the latest crypto updates. Thank you very much for watching, and daily out.